Good afternoon. Welcome to the Awakening Entrepreneurial Spirits program on small business. Today we will show you Program 3 of a 6-part series. The project, Awakening Entrepreneurial Spirit, the Key to Job Creation, emanated from the Pasadena Economic Development Committee in Newfoundland. They realized that an effort had to be made to create an awareness of small business in the Humber Valley Bay of Islands region, to give people a basic understanding of small business, and to help people realize that through local investing, a sound community-based economy can be established. After funding was approved through the Innovations Program of the Canadian Job Strategy, it was decided that local residents, business people, and resources would be utilized in order to create a dynamic impact on residents of the area. 26 individuals were interviewed and their businesses profiled in a series of videos illustrating the concept of why to as opposed to how to enter the business world. After the videos were completed, it was decided that the best way to present them to the 22 communities of the Humber Valley Bay of Islands area would be by way of satellite. Consequently, on January 24th, a live 11-hour television broadcast aired from the Venture Center in Pasadena. Approximately 1 hour into the broadcast, participants realized that they were reaching not only the Humber Valley Bay of Islands region and other parts of Newfoundland, but areas in Canada and the United States as well. Viewers of the broadcast saw a wide range of programming that included the core video series, live panel discussions, community profiles, school concerts, and live entertainment. Audience participation was encouraged with the provision of a toll-free telephone number and accommodations in the studio for anyone wishing to see the event firsthand. A newspaper editorial that appeared after the broadcast deemed the event successful in breaking the ice to unveiling the economic potential of the Humber Valley Bay of Islands and in revealing yet another innovative economic strategy that involved people as participants for self-help. Today's program examines a question frequently asked by entrepreneurs. How can I finance my business venture? We'll talk to some local business people to see how they arranged their financing and discuss the importance of local investment to the development of business in Atlantic Canada.
Have you ever been doing something and wished there was a gadget to make your task easier? Well, chances are someone else has had a similar idea and would purchase that gadget if it were available. There's your market. All you need is to produce that product and pledge your time to making it a success. The first step to starting your own business is getting the idea, deciding to supply a need. Another big question asked by potential business people is, how am I going to finance my business? Let's look at how our entrepreneurs did it.
Well, we had to slowly build up. We had some help from the Government of Canada through DRI. We had a grant to put some equipment in place. That was a big help. But the hardest part of the whole operation was developing the market, and we still have problems marketing the product.
Well, about 26 years ago, I would think. We started to just grow flowers just for our own bit of fun of it, until some fella came here one evening asking if he could have some flowers to bring into his wife in the hospital. And that sort of set the seed. And from there on, we thought we'd go into the business, and it grew from there on.
I started out with a small bit of money, and I guess if you want it bad enough, you'll get it. That's the way I look at it. So I went to the bank first, and they were very helpful. Then I went through the government because for the simple fact that the interest rates were much lower than the bank. So that's where I borrowed my money from. But in the meantime, the way the government is, you got to spend it, and then they'll give it back to you. So I had to go to the bank to get the money first. So the bank manager said he'd like to come up and see what I was doing. So when he came up, he said like it would take about 3 days for my loan to go through. Before he left there that afternoon, he said, how many thousand did you say you wanted? And he signed a paper right there because he felt that I could build my business on my enthusiasm.
Hello, I'm Bill Parley, Development Officer with the Town of Pasadena, and the topic of our program today is dealing with business financing. Before a new industry can be introduced into any community or existing industry expanded, a source of funds to finance such ventures must be put in place. And we have with us today to discuss the various concepts involved in business financing, three gentlemen who are very much knowledgeable about the whole topic, have been involved in it from different perspectives. And first of all, I want to introduce Mr. Harold Lundgren, who's chairman of the Economic Council for Newfoundland, and certainly very well known in Atlantic Canada from a business perspective. We have with us then Nelson Bennett, chairman of the Economic Development Committee for the Town of Pasadena, and Dave Tizard, who's regional manager with the Newfoundland Development Corporation in Cornerick, Newfoundland. As I said, we're here to talk about business financing. And I guess the first question, and I'll pose it to Dave, is business investing. What is it? What does it mean when we talk about financing for business? What is it all about?
Well, without complicating it, I suppose, Bill, the simplest thing to say, it's the buying of the means of making money. And by doing that, you've got to generate money. Someone starts, in the simplest of terms, he starts a small little business. He needs things to do. He needs a truck. He needs a place to operate from. He needs capital to run on. He needs to buy inventory. He's got to generate the money to do this. And you do that through various ways. We can pick it up a little later on, but you start off, normally, what's the logical thing? If you start a business, you have enough of your own money. You'd say, I'm going to start a business, I have my own money. If you don't have enough money, then you've got to look at other sources of money. But really, it's the initial investment where you buy assets, you buy things, to make things, to sell things. And that's about the simplest way of putting it.
Okay, Mr. Lundgren, from the point of view, I guess we'll take it from the point of view of the Economic Council with regard to, I guess, the need for more local knowledge and more local involvement. And I know you've been involved in both through the Economic Council and the Royal Commission on Unemployment, dealing with all different aspects of getting business going. And I guess from the local perspective, how important is it to the local economy to have investment and local investment in business?
Well, it's extremely important. The Royal Commission felt that, the Royal Commission on Employment and Non-Employment, that is, that you referred to, figures extremely important because we have to create jobs. We have to get new wealth in the province, and the same thing applies to all the provinces of Atlantic Canada. They're all about in the same desperate straits for jobs. And one of the ways to do that is to have small business make a greater contribution to the economy than it has in the past. And of course, in order to do that, as Dave says, you've got to have some type of initial investment, equity capital, or your own capital to put in as equity to start off most any type of business. And that's required anywhere for the initial investigation of the project. You know, where there are markets, where there are no markets, and how many people are needed in the job, where the raw materials are coming from, and all these other things. These are the initial things that's needed to start with.
Okay, we've heard some different terminologies being used just in this minute or so with regard to forms of investment. But before we get into the different kinds of investment, the different kinds of money that's out there, and I say different kinds of money because it comes from a variety of sources, I'd like to, for Nelson Bennett, who's been very much involved in community economic development for a long period of time and has been actively pursuing, I guess, a local investment vehicle for this area, to give his thoughts on you know, how easy or how difficult it might be for local people to get involved in the whole scheme of investing, because I think that's very important from the local level, is to ensure that people play a role, and in order to play a role they have to understand.
Well, we've said there are basically two types of capital, equity capital and debt capital. And equity capital is built up by, as was already suggested, by the individual's own resources, his friends, and probably some people around who are looking for investment. But by and large, in Newfoundland and certainly all the Atlantic provinces, there's great difficulty in getting local equity capital because we don't have the institutions geared up to attract and to the vehicle to use to to use local capital. Most of the capital here in the Maritimes, the Atlantic provinces, are siphoned off through banks and whatever, and of course, if they're not used for loans in the area, then of course they go to other parts of the country, as a matter of fact, other parts of the world. So there is a need for institutions of that type, particularly in the form of venture capital corporations. And in this respect, of course, some of the provinces are now, some of the provincial governments are setting up stock savings plans, and the object of this, of course, is to encourage local investment and also the development of local institutions.
And of course, an added incentive of the stock savings plan is that the investor gets a tax break.
That's right.
Which is an incentive there.
We talked about tax breaks when we talk about investing. I guess the bottom line is, and Dave talked about the need for when someone starts a business to buy assets, but there's a return. When you invest, I guess the term in people's minds is that if you invest in the bank, obviously you get interest. So if you invest in business, you obviously got to have some return as well. So maybe we should look at some of the different kinds of investments that are out there, money that's out there, and where would one go to access that for a business? Dave, do you want to lead off and go through some of that? Nelson mentioned equity capital versus loan capital, but there are other schemes as well where people can get money to get into business.
I think it's probably wise to go over that again, equity and debt. I know even in our own organisation we get sort of puzzled by it sometimes as the approach to it. The equity, pure equity, is if I said as a lending agency, you want to start a candy shop, and you say, I've got $5,000, and can you give me some money? And I'll say to you, yes, I will go in with $5,000 as well. And I can put it in different ways now, Bill. I can say to you, I'll take shares with you, and I'll own part of your business, and we'll each share the profits accordingly. Or I can say to you, Bill, no, that's a bit risky. I'm going to give you the $5,000, and I want to get a return on that. And you would say, well, I'll give you some preferred shares. And all that is another form of loan in which I get interest on it. You give me some shares in the business, and I get paid first out of the interest type of thing. So I'm getting a return on my money. And the other part of it could be that I might say to you, well, I'll give you a shareholder's loan. I'll just buy one share in your business, and I'll loan you the money. But I'm just trying to make the distinction here between equity is where I take a chance with you. I say, I've got common shares in Bill's candy store. But debt is where I've really got in, and I can secure the debt, actually. I can even take a, security on some of your mortgage over some of your property, a chattel on some of your equipment, the candy making machine type of thing. But there's a distinct difference there, and people should understand what that is. That's one form of it, to go out on the street and get money. That's the bigger companies do it on the stock market. They raise this money, and you've got shares in Ajax company, and you know what, you get reports every now and then, but if they make money, you make money, and your shares go up. If they lose money, you're a poor operation, your shares go down. That's the generation of capital, equity money, as one form of it. The other form is traditional lending, where you go to a bank and you borrow the money from the bank, and they give you the money. Or you can get some other forms that the government has of money that you get borrowed from FDBB, that is a government agency set up. They will give you money. You can borrow from a provincial agency like Rural Development, and you can borrow up to $50,000 with them, and they'll give you a preferred rate. Again, it's an incentive by the provincial government to say to somebody, we'll do this for you, and we'll help you, and we'll subsidize the rate. The ECOA buy-down thing is the same type of thing. Trying to get money into a business and reduce the cost of money, because money has a cost. No matter how you twist and turn it, there's a value to money. You just can't throw it around for nothing. You've got to put some kind of a value on it.
And by the way, Dave, you might mention that some people in considering equity don't always think about it as having a cost, because pure equity means that you repay that money only if the business is successful, only if there's a profit. Whereas if there's a debt, you owe it even though you don't make a profit. I mean, the interest mounts up and so on. So this debt equity, debt versus equity are two different distinct forms of capital that have to be really well understood.
There is another factor too that might be considered in that, another term I may introduce, that is the idea of risk. Normally there's greater risk, of course, with equity, in the sense that if the business were to go broke, of course, the equity capital that was put in, there would be no return. whereas, of course, with the debt capital, which is the form of loans, then he would have first call on the assets that remain in the business.
We've heard some, I guess, terminology, investment terminology being bantered around, and probably from the local perspective, from a person sitting at home today watching, they're saying, well, what does all this mean? How easy is it for local people to get involved in investing? I mean, I think from our perspective in our work over the last couple of years, we found that people tend to think that the only form of investing is putting money in the bank and getting a return. We've talked today about other kinds of investing, other kinds of ways to put your money to work for you and get a return. But is that only for large companies? Is it only for rich people? Can normal, ordinary people get involved in the investing game on the local level?
Well, the Newfoundland Labrador Development Corporation, they put out a bond issue last year, a development bond, and the rate of interest that someone would get on that bond would be equivalent to the interest rate you get at Canadian savings bonds, but the money was used for NLDC to invest in other companies in Newfoundland. And there was a guaranteed return on that bond by the provincial government. So it was another incentive, if you will, for the provincial government to get local people who have some money lying around to buy these bonds versus buying Canadian savings bonds. So that's a form of investment money put into an agency of NLDC, which in turn is an agent that's capable of assessing various types of companies and to put it out, hopefully, in companies that will bring to them a return, and consequently it wouldn't cost the provincial government any money, because the NLDC would have gotten a good return on the invested capital that it put out into various little companies.
Bill, just to add a little bit to that, just to put a bit of background to it, if you think in terms of all the people who asked about those who can invest in smaller business, that's the way that Harold has outlined. But there are many, many millions of dollars that get invested out of Newfoundland into other businesses outside the province. They're invested into CIL or Canadian Pacific, what have you, all these shares that are bought outside. Some at risk, some are not, some are, this type of a thing. So the goal would be to say if you could channel all that money back into Newfoundland within safety. Obviously, you can't get something attractive for everybody, but if you could wave a wand and have it all in a good investment within the province, it's quite a little nest egg. And this was sort of the idea, wasn't it, Harold, to bring this money back and try to funnel some of it into our own economy.
There's a lot of capital going out of the province, something in the order of $300 million a year.
Multi-millions of dollars.
That goes out of the province. Some of it comes back, by the way. Some of it comes back in the form of mortgages on homes and mortgages on commercial buildings and so on. Not all of it stays out, but by and large, the larger amount is invested elsewhere in Canada, where it's perceived by many to be safer. It's a statistical fact, incidentally, that investments in Atlantic Canada are as good or a better return for the investor than they are in Upper Canada. But that doesn't mean every little business. We're talking about a general rule here of investment in Atlantic Canada.
Sure, I guess some very interesting points in the amount of dollars that are actually going out in security, I guess, of investment. But again, getting back to local investing, what mechanisms, other than the ones you talked about, where there are government programs put in place, can we help to generate, can we put in place to ensure that the $300 million that's going out is at least a portion of it is kept in invest in the small business? Nelson, do you want to address that, because I know it's keen.
In addition to the stock savings plans, the provincial government of Newfoundland now have introduced legislation to support venture capital corporations, which again could be small companies that would bring in small amounts of capital from individual citizens, and then in turn take positions, or equity or debt positions, with some of the local companies.
Looking at it from a different perspective, because we're hopefully addressing today people that we can entice probably to at least look at entrepreneurship and getting into business as an alternative to what they're doing. And that's the focus of the programs that we've put together. So what about from the point of view, if I want to get into business and I want to get money, how do I go about that? How difficult is that? Where would I start?
Okay,
because that's always the question that's on people's minds. I've got an idea, where do I go? And how difficult is it going to be to get all these dollars that we're talking about? Because we're talking about lots of dollars out there, but obviously we don't see huge numbers of people going into business in Atlantic Canada at this point in time. So there's something that happens in the middle. If there's all this money, and there are people out there that want to get into business, yet say that, you know, oftentimes I can't get money. So where do they start?
I'm going to say it's an interesting little statistic, probably a bit of an aside to this. Talking about money going out of the province, there's $40 million goes out every year in lotteries. Money, of course, a lot of it never comes back, obviously.
Very high risk.
Very high risk, yeah.
Indeed.
But I suppose you'd go back to that, but you'd go back because you were thinking of an audience sitting in a chair. Some person has an idea and they want to know where to go. Obviously, you'd say, you go to traditional sources, you'd go to a bank and say, I have an idea, I want to put this thing through. And the bank usually sets out a little sort of a scenario and says to you, well, if you've got $1, I can lend you $1. That's sort of a rule of thumb banks have. We won't go any further than what you've done, but we will give you dollar for dollar. So that if you don't have that, you've got to say to yourself, I don't have that much money. Maybe, and don't forget private sources. Someone alluded to it, I think you did earlier, private sources, maybe Uncle Charlie or Aunt Maud or somebody's got some money they can lend you. So then you say, all right, I've got enough money now to make up the deal with the bank. Now failing that, there are other agencies you can get around, and I'm sure we're speaking here of an agency in Newfoundland, which is the Rural Development, up to loans up to $50,000. We've got the Newfoundland Labrador Development Corporation, and I'm sure other provinces in Nova Scotia, New Brunswick, and PEI, they have these agencies, government agencies. And I know people sometimes reluctant to go to them, but these agencies are there. And they're usually supplemental lenders. What they say to you is that do what you can with the bank and then come to us. Maybe there's a way we can fit in here and support that application. But so you've looked at now the traditional sources, you looked at private funding, you looked at government money, and it's very difficult, really, to be honest, for a small person, Bill, to access private money. Although sometimes there are someone said, yes, I'm interested in that, I'd like to go in with that little deal with you and take a portion of it. And sometimes, as a tip-off, be very careful what you can do. If someone's sympathetic would like to help you, maybe you can say to him or her, we'll have a buyout agreement. You can buy it back after and say, we'll have to make a deal up front that I'll buy out my shares back from you. But it's a way of doing it. It's just a way of going at it. I think probably the biggest thing is just to put your little plan together and shape it up. That's the most difficult part, I think, Harold, trying to shape up the deal.
Yeah, well, I think it reverts back initially to some type of knowledge and education. And so many very enterprising people with good ideas, they have the idea stronger in their mind, but all the structure for the money and so on isn't. And they pursue the idea without having the other things with them, and they get 2/3 down the road, and there's not enough money, and the whole thing falls apart because it wasn't put together properly to start with. And that's where I think more effort has to be put in by agencies such as maybe the one that you're involved in, for sure the teaching institutions in the province, to put off a lot of relatively short-term courses for someone who has an idea, get this other thing in their head too, in their heads, whatever they got an idea to do something, but get the financing and the ways of getting the financing together. Because as Dave put it, if someone were to come to you today with an idea that says, look, if I had $10,000 from you, I'll give you $20,000 next June. Now, you will do a lot of scraping. But if someone came, I need $10,000 from you, but I don't know if it's going to work, you're going to say, well, when you get it to work, come back.
Yeah.
But you can't get it to work because you don't have, the person doesn't have the money. So it's risk and return. And all of these things will come together better, not totally, after a person has got a business plan together, maybe got some help from some local citizens in the community or accountants or helpers, or maybe gone to night school and taken a course so that they themselves can put this thing together. In the initial stage, take it to another stage and a third stage, and if the plan is good, there are people who will invest. Because there are people, we just said there's $300 million to be invested. Right. So if a company in Ontario is going to pay 10%, and this person who's got a little business is going to pay 20%, for sure a person with a little business is going to get it before someone in Ontario.
Sure, and again it gets back to, as you said, putting in place a proper plan and demonstrating. I think the key to this, and we're going to talk about it in another program, is what the makeup of an entrepreneur, the makeup of a small business person. And it gets back to, I guess, selling yourself and selling the idea that you have, and the plan helps you do that. because again, you've got to give someone some indication that you can accomplish what you're articulating that you can do.
That's right.
Before they're going to invest. And I think this is why the $300 million is going somewhere else right now, is because the people in other areas have built up credibility, they've got good functional companies, and they're demonstrating that they can pay a rate of 10% back or 11% or whatever the amount is to the person that invests. And I think in Atlantic Canada, we've got to put together the plans initially to be able to demonstrate that, yes, we can give the same payback, and yes, we're going to be around for a time longer than a short period of time. We're going to be around for a long period of time.
I comment one, is there time to? The Newfoundland Stock Savings Plan, which is past the House of Assembly, but it hasn't been gazetted yet. It will be soon. Well, it has several levels of investment. And one that would be of interest to your audience, I think, would be we call it the small investor, whereby you can get, say, a small number. I don't know from memory, was it 12 or 20 or 25 persons who are willing to invest some amount of money in shares in, let's say, your venture. And whereas most of the ventures now are public, on the public stock exchange, where there are thousands of investors. But this allows for a small number of investors up to, let's say the number is 25. And in a community, you might be able to get 25 investors who would put in small amounts of money. And the beauty for the investor, to take away some of the sting of loss, is that you can write off the part of the investment that you put in against your provincial income tax. So if you put $1,000 in and you're allowed 30%, so $300 would come back to you the following year. So you've invested $1,000, but it really has cost you $700. And that's an incentive to get local Newfoundland investors to invest in their local communities. And incidentally, the provincial government is going to provide, in their regulations, providing assistance in setting up such a public stock company, if you will, public investment company.
Certainly a move in the right direction, because as we said right at the beginning.
Yes, it starts to answer some of the questions.
Yeah. Right, and I guess that's what we need, to answer questions as well as encourage people to invest, because again, right at the beginning we stressed the importance of keeping some of that money in our own communities, so it generates and enhances wealth and creates jobs as a side effect, I guess, of enhancing wealth, and that's what it's all about.
There's a psychological factor here I think we should introduce as well. That is, if an individual, of course, has the money to provide sufficient capital for his company, he can keep it totally private. However, at the instant that he shares with other people, through other people putting capital into it, whichever form, then of course he also has to share some of the knowledge and some of the management. Many people, when they're starting business, of course, dislike that very much. They would rather keep it public. To carry it even further, of course, if you got far enough along that you make your company, put your company public on the stock exchange, well then of course you have to share to the total public.
We've covered a whole range of topics, and I think we've given people a little insight into the world of business financing, and certainly probably covered off some of the intangibles and some of the terminology that's used in simple form, so that people probably have a better appreciation today of what we're talking about. Before we wrap up, I'd just like to go through the panel and see if you've got a comment you'd like to make as a wrap-up, an incentive to someone out there, because again, in the business that I'm in, I see a lot of opportunities out there for people to get involved in business. I see the economy in the whole Atlantic region taking on a whole different thrust in the next 3 or 4 years, so there are opportunities. We've established there is money, so what we need now is people to get on and get with it and do the planning and take advantage of what's out there. Mr. Lunding, have you got any comments you'd like to?
Well, just to follow up what Nelson was saying about people getting local investors to come with them. One of the reasons that was established in a study recently is that Newfoundlanders, and I would say the same thing applies to most of all the Atlantic Canadians, for some reason don't want to be sharing the investment. They want it all themselves, and in doing so, expect someone to put up capital for them. As Dave is saying, you go to the bank says, sure, I'll put up capital, but you got to put up yours first. You got to lose yours first before we take a chance on losing ours. Well, that's a risk that the bank takes, and it's a big risk. But if you go to your neighbors or your friends and say, well, I'll put all mine in, and you get 10 friends to put in theirs, and it's equity, they lose or win with you. But if you win, they got to get some of it back. And I think if we do more of that type of sharing, and I'm not preaching a gospel of sharing here, I'm just saying that that's a way to get rewards to someone else if they're taking a risk with you. And it doesn't have to be 100%. Maybe a lot of people own 60% of the company, they control it, and with 51%, you control it legally as if you had 100%, except you got a responsibility to your investors, just the same as you had 100% and borrowed from the bank, you got a responsibility to the bank. You never escape the responsibility. It's just to whom you decide to dispense that responsibility. So I think if there were more sharing, there would be more investment capital, and consequently a little bit easier to answer some of the questions you have there.
And a better economy in Atlantic Canada. Mr. Bennett, have you got any closing
Not
remarks?
much I can add, but I would say, of course, remind everybody and ourselves that we're living in an age of information. And consequently, that is where I think a businessman needs to, that's the way he needs to approach, in that he has to have all the information that's available, whether it be in financing or whatever.
Mr. Tizard.
I'm going to pick up on what Nelson said, that a lot of people say to me, oh, it's complicated. It's very complicated getting money. It's so hard. I've got to do all, they want all this information. But we live in a complicated world. That the old day of a handshake, and you said, this is a fine man, I want to lend you $5,000, goodbye, that's gone. We're in a very, it's complicated because the world is complicated and the business world is complicated. Don't be afraid of it. Pick it off piece by piece. There's a lot of agencies can help you, so don't be afraid of it. But it's a fact of life, and stick with it.
Well, thank you very much for coming along today and sharing your knowledge with us. I think we've certainly given people in Atlantic Canada some insight into, as I said, business financing, ways to approach it, and certainly a positive attitude from this program. So the challenge is for the people out there watching to look at the opportunities, look at the improvement in the economy, and get with it and participate and help build Atlantic Canada into a much more vibrant economy than what we've seen in previous times.
We also spoke to Hubert Harnett in Corner Brook, Newfoundland, and Harvey Weber in Sydney, Nova Scotia, who gave us their views on equity capital.
Mr. Harnett, tell me a little bit about ResourceCan and what it's all about.
Well, ResourceCan was founded in 1981 as perhaps the first venture capital company in the province. I believe we were the first. There was another one came afterwards called Atlantis. And the original thought behind ResourceCan was to get involved in the offshore activities, primarily in financing service industries, that type of thing. However, as you're very well aware, things didn't unfold as everybody thought they would, and we continued to do business. We made a major investment. Our first investment was in the fishing industry, and that company's been quite successful. It was Clarendon Ocean Products, it was called at the time, and it's now been taken public on the Vancouver Stock Exchange, and is a company of national renown, I guess. We looked for resource-based ventures, and the second project we did was a joint venture with Nova, an Alberta corporation, developing a peat project in Bishop Falls. They already had a peat bog going there, and they were doing some experimental work on with the idea of using peat for energy. We found a company that had developed an oil absorbent based on peat, and we thought we had a national or a world product, and I guess we do. And that was our second major venture, and that's still going as a joint venture between ourselves and Nova, and it's called High Point Peat Limited. And we're having some problems breaking into the international market, but we're getting there slowly but surely. But the venture capital basically is high-risk capital for high-risk projects that normally banks and other financial institutions wouldn't undertake because of the, the risk associated with it.
If somebody had a sound idea and came to your board for a business based on something of a resource here in Newfoundland, what would be the procedure for you folks?
Well, we usually ask them to present us with a business plan of some sorts, and we might even help them with that to some degree if they haven't got something that's developed to the point where we feel we can adequately look at the project and feel comfortable with it. Basically, that's all is involved, and we try to let it be known that we're there and that we have some funds to invest, and if it's a good idea and we like it, we'll invest.
Is there any particular size of projects you're looking at?
Not really. We're not interested in a really small project, but we really don't have any dollar parameters. We like to do investments in the $100,000 range, but we've done some at the 50 level, and we've done some at much higher than that. But 100,000 of our money, coupled with whatever other funds might be available, is where we like to go. Well, generally we take a minority interest. When I say minority, something less than 50% in the project, because we're not really there to, we don't want to take control. If a guy comes with a good idea, or a girl, we think they're the ones that should benefit most if the project becomes successful. However, we expect to get a return, and a good return on our investment as well. And we would look to getting out, say, in a 5-year time span, when the business develops to a point where the original owner or some other investor would want to take us out, hopefully at a profit.
What's the climate like in Newfoundland, then, if you've been traveling around, obviously, and seeing things happening?
Well, the climate is not, it hasn't been great for venture capital up till very recently. And it hasn't been great in Atlantic Canada. I'm involved, ResourceCan is involved in another venture capital firm called Atlantic Ventures Trust, which was set up by a group of insurance companies and other large companies in the Maritimes, and some pension funds. It was a fairly large fund. It was it was designed to be a $10 million fund, but we started with around $7 million. And we had great difficulty in finding ventures to put those funds into. Since it was a trust, it had a finite life, if you will, and the trust expires in December '87, and we have decided to wind it up rather than renew its mandate, because we just didn't find the right investments. Now, I can tell you that most recently the Newfoundland Labrador Development Corporation, which I happen to be a director, has entered into the venture capital field in a slightly different way. They will match private funding. For example, if I want to set up a venture capital company, which ResourceCan did, by the way, it set up ResourceCan Ventures, because they didn't want to deal with companies that were already set up. So we set up a subsidiary called ResourceCan Ventures, which we registered with the Development Corporation, and if we make an investment, they'll match our dollar. So you sort of get a double bang for your buck. If you were looking at a project that required $100,000, well, you would invest 50. They would match your 50, so that you got 100 to go into that project. Now that program, while it was very slow getting started, is now really snowballing, and we're getting a lot of applications, and they're good projects, and it's also bringing in substantial amount of private sector money, which is what it was designed to do. And it's just a great program. And
that's something that we've been trying to find out a little bit more about, that it is important for the private sector to get involved in developing more small businesses down the way.
Yes. Yeah, it's very important, because if all you have is just straight government assistance, you don't have the benefit of the experience of some of the people that have been in business for years and who can look at a venture slightly differently than the originator of the idea. And also the venture capital people who invest in ventures and projects tend to bring some management expertise or some financial expertise or whatever to the project, and it helps the originator of the project along.
You were saying earlier as well, high risk. Tell me what high risk means.
Well, high risk could be where the market, you know, you have a good idea, but the market hasn't been proven, or it's a very innovative, like a high technology thing where you're trying to develop some gadget or whatever, some technical thing that hasn't been really tested, and you're really putting your money on the idea. And you know, unlike a mature market, I mean, if you're going selling shoes, you know people buy shoes, and whether you can successfully break into the market against all the competition is something else. But at least you know, yes, there's a market there. But if you're dealing with something, take for example our oil absorbent project. We had a unique product, but it has never been really tested in the marketplace in a major way. So it is high risk. It takes a lot of marketing money and a lot of development funds to go into it, that kind of thing. Also, it's the kind of thing that banks can't finance because there are maybe not enough hard assets that they can take a mortgage or venture on, that sort of thing, you know. But there's no really, you know, there's no hard and fast rules about it. Basically, you make an investment because you expect to get a return on it. So if the idea looks good, whatever it is, you know, you make the investment. Now, different venture capital companies have different niches that they stick to. Some stick to high tech, some stick to manufacturing, you know, some stick to service industries. But in our own case, apart from initially thinking we were going to be investing solely in resource-based industries, we have now decided that whatever comes along, if it sounds good and it has the potential to make a dollar and give us a return on investment, we're prepared to look at it.
It sounds as if venture capital is an ideal way to go, if there is such a thing, without the bank sort of hanging over your shoulders. You folks are willing to wait, but again...
Well, yeah, I mean, I like to think that it's the way to go, and the one thing that happens, of course, is that the guy with the idea doesn't like giving up anything, but it's you know, it's better to have 50% of $100 than there's 100% of $50. So if they look at it that way, sure, they're going to give up something, but they got to think of the venture capitalists as not wanting to take over the business, but wanting them to take their idea and be successful with it, so that they can give the venture capitalist a return, a good return on his money, and he's quite prepared to get out when the opportunity is there for somebody to buy him out, either the original owner or some new investor or new partner. You know.
So that is the whole idea, that somewhere down the road...
Yeah, because you want to roll and do another one. I mean, you want to get your money back from that one with a good return on it, and then you want to take that money and do another deal. Right? You don't want to stay in for the long run, generally speaking. You want to have an exit.
Certainly, there is always a need for money, and there are people in any community that have had some success. The problem is putting the one with the need together with the people who have the funding or the means to get credit. It was in November, or just previous to that, in 1980, that a young man came back here with a very advanced scientific idea in the field of high tech. Now, if there's one thing you'd think about if you mention Cape Breton, it wouldn't be high tech, because we are coal and steel and fishery. But this young man who had been trained in the United States and had worked with a gigantic company and had been born in Cape Breton, so he had these feelings of returning to his roots. Now, when he came here, of course, he was regarded with suspicion, because high tech is very glitzy and is very glamorous, but it's also frightening to men who have to put up money. And yet, he had some government contracts to start him. The thing that he was making was needed, and obviously we had to have some nerve. So a group of people had a meeting and analyzed the project. Just at that time, there was the Nova Scotia Venture Capital, which you also have in Newfoundland. And with us, there was a feeling that this young man, having chosen to come to Cape Breton and being in that new advanced field of high tech, should be supported. The technique was very simple. An invitation went out to approximately 100 people who could afford to write a check or invest if they wanted to. And at the beginning, I would make a point with you that there's two major words. One is willing, and the other is able. Because although in every community you have countless people who are able, you have far fewer that are willing. And the problem is to move them from one state of mind to the other. However, This project seemed so exciting and so new, and a number of us were committed, and that's a separate point. You must get a few who will be the bell ringers or the leaders, who are the ones who are committed. If you don't have the original 1, 2, 3, or 4 in any group who say, I'm going and I'm putting money on the line, you'll find the majority will just be hesitant. So the one point I would make from many years of experience in this field is, whatever the project, if it needs money, 1, 2, or 3 investors must be committed, because it will be those people who will lead other people into the venture capital deal rather than the person who needs the loan. The person who needs the backing doesn't come from strength. They only have the idea, but they don't have the capital. So therefore, you need somebody who is strong in having made money, in being a success, with the right image, and has some clout, and that is the person or persons who are necessary to merge with the one with the idea. Now, coming back to our particular project, we sent out notices to 100 people, all of whom were able. About 65 or 75 attended, and a few others made the usual excuses. People make excuses who don't want to be involved by saying they'll be out of town, or they're sorry, or other reasons, and it really doesn't matter. Because if you get a large enough group going with you, there are always followers. The main thing is to have that original group. 1, you need the idea, the one who wants money, and 2, you need a few committed people, and then after that, they lead you into a broader group. In our case, we had about 65 or 75 come, and of that group, 45 were agreed that they would put up $5,000 each. Now, another thing we learned, when you come to $1,000, it's easy to get a lot of people, but the total doesn't add. And as you go to 5,000, the total adds better, but there's fewer people. When you get to 10,000, and similarly lead to 20 and 25 and 50, you get far fewer people. And therefore, it's like a ratio. You have to decide, what does this project need? $100,000, $1 million, $5 million, and decide on the level that might get you there. With our case, the company was called Micronav to start. We made a name for ourselves, the investors, to be Airborne, and that was to put up our local money, Airborne. We finally ended with 50 people at $5,000 each, and that was $250,000, because we were going to the Nova Scotia government for venture capital, which you have in Newfoundland, and we doubled our money, which was the $500,000 of investment money. With that money, we were then going to a bank. Here, we said, is what we have from the investors. Here's what we need on a business basis. And from then on, we've had the many years of ups and downs of just being a regular business. When you have a few people committed, they must do some spade work beforehand. There's a certain sequence, and I mentioned how you have to have those committed because the person with the idea can't do it. Therefore, those that are going to put money on the line have to call friends, relatives, neighbors, and create an aura that it's going to go and you should be in it. People have a natural suspicion about parting with money until they've been in a half dozen deals. The irony is, the first 3 or 4 times when you start in this field are so much more difficult than 3 years later, after a profit and a loss and a history has taught those people that it's games. In venture capital, there's a well-known percentage, and every investor learns that of 10 monies that you put in, if you have 10 venture capital groups, 2 will fail completely and you'll lose every cent. 6 will limp along. They won't die, but they won't live. 2 and 6 are 8, and the other 2 will win and pay for all the others. Now you'd say, why not just go in the 2 that are going to succeed? If anybody knew how to do that, they could rule the world. Because it is so chancy, so perilous, that the venture capital field has not become that popular. Why? Because people don't want to put their money in the 2 that are going to lose completely, nor do they want to tie up money in the 6 that are going to limp along. Everybody is looking for the big winner, but nobody knows them in advance. In every place Anywhere in the world, you find somebody who's the entrepreneur, even if he can't say the word and doesn't know what it means after you explain it. He's hot. He's got some spark. Inside him is just something that makes him more eager beaver. It may be ambition, and it may be hunger. It may be a big family to support. You don't know the motivation. But everywhere, there is a certain proportion of the people who have that spark. They rise above their fellows economically, in a money sense, by some quality of buying and selling or hustling or whatever you might say they are doing. Are they trading? Are they black marketing? Are they beating the government rules? Whatever it is, somewhere in the world there is that quality. And in the English language world, we call it entrepreneurship. It's the ability to move ahead in a certain way with regard to economics and money. There is no place in the world, let's say, where you'd have more than 200 or 300 or 400 people, where you wouldn't find somebody with that spark. The problem is the environment. In certain places, perhaps in Newfoundland, but certainly in Cape Breton, there's a feeling that things won't go. Just a general feeling in the air that things won't go. A sort of a negative feeling in our culturation. Yet, somebody comes in, like McDonald's or Wendy's or a similar new business, and has the biggest opening and the biggest sales of the entire chain. Just a few months ago, we had, to prove my point, a Tim Hortons opened in Sydney. There's a number of them all across Canada, but the opening was the biggest single day or week or something like that, and it has sustained a place like 5th in the entire chain across Canada. And from the point of view of an investor in Toronto, Sydney would have a Tim Hortons that would be just in Nowheresville. And this kind of evidence has really made me positive that in the smallest town in Newfoundland, where you have 200 or 300 people, there is somebody who would have an idea. If you'd only give that stimulation that we're looking for it, don't hesitate to come forward. Remembering always that the majority will not succeed. And the problem is to get investors to join you in this field when there's no history in a small town of others having done it.
Mr. Weber, where do we find venture capital money?
Everywhere. In each community, there are people who've made it in their own line of work. Is it a fisherman who salted money away for many years? Is it the corner store? Is it the supplier to the fishery industry? Is it the forester who comes into town just a few times a year but gradually has become loaded? In every group of people, there are many who've made it in their own field. Now, what we have to do is to show them the obligation they have to help others succeed, and also they have to gamble. And let's face it, Canadian taxation makes it very desirable to gamble money, because do you know that if you have a business loan, and it goes sour, that you can write it off your taxes? It's legitimate, because if you have a business loan and you make a profit, you're going to pay income tax on the profit. So common sense says that if you lose money in investing, it comes off the profit that you might have made in your business or profession. So, do you have a doctor? Do you have a lawyer? Do you have an accountant? Do you have anybody working for the government on regular salary? The answer is yes, everywhere. And that's where you find money, from the people who have made it in their own work or profession. And let me say this, those people have an obligation in our society. This is no charitable deal. This is risk-taking, which is the whole basis of our capitalistic democratic society. It just isn't fair for somebody to be secure and have bucks put away through a lifetime of work and saving, and not to help, not just as charity, but to help the economy grow. And what's more, I'd say there is a dividend, not just the tax break, no, there is a dividend of satisfaction in helping your fellow man. And it needn't be corny, because at the end of the road, there's profit and more money for the investor who takes the gamble.
Just how important a role does small business play in our local economy? Let's have some fun with this question. Let's imagine one little chicken. That one chicken, along with several thousand others, provides a living for a chicken farmer in the Humber Valley region. Once that chicken reaches a certain stage of maturity, he is trucked to Newfoundland Farm Products for processing. The trucker earns his livelihood from the truck and its cargo. The employees at Newfoundland Farm Products earn their salary from preparing that chicken for retail outlets. That one chicken is then handled by staff at a grocery store who are paid from the profits made from meat and grocery products. That chicken then provides Sunday dinner for a family either at home or at a restaurant. This one little chicken is just a small example of how businesses in the Humber Valley Bay of Islands area can benefit from each other. The changes in the economy over the past few years are staggering. It is evident that a great deal of development has taken place and will continue to take place in the near future. Small business seems to be the key to Newfoundland's future, and more people are taking the plunge and opening the doors to more businesses. If you think you may have what it takes, if you have a solid idea, then go for it. That's what small business is all about.